Welcome back to Stock Talk.
Good to be here.
Today we're jumping straight into Alibaba Group. They just released their Q1 2025 and fiscal year 2025 results on May 15th.
Yep. Fresh off the press, we've dug through the report.
We definitely have. We're going to pull out the key insights, maybe some surprising numbers in there too.
Sounds good.
And hey, if you like what we do here on Stock Talk, please think about subscribing, maybe give us a like, share it around. It helps.
Absolutely.
All right, let's get into Alibaba. Where do we start? The overall performance.
Yeah, let's start there. I mean, the top line looks solid. Revenue is up 7% year over year. That's about RMB 236.5 billion, or just under US $33 billion.
Okay, 7%. Decent. But they kept talking about this user-first AI-driven strategy. Seems like it's, well, maybe working.
It looks like it. You see that particularly in the core business growth accelerating a bit. And, the profitability side is where things get quite interesting.
Right, the adjusted EBITDA. That gives a clearer picture of operations, doesn't it?
Exactly. It strips out some of the noise. And that jumped 36% year over year, came in at RMB 32.6 billion, or about US $4.5 billion.
Well, 36%. That's a pretty hefty increase in operational profit. Shows good efficiency gains, I guess.
Yeah, definitely points that way. But the net income figure, that's the real headline grabber, isn't it?
Oh, yeah. What was that?
Up 1,203% year over year.
1,200%. Seriously.
Seriously. RMB 12 billion, or US $1.7 billion. Now, there are probably some factors in there, maybe comparisons to a weak quarter last year, but still, that's a massive leap.
Okay, that's huge. I need to unpack that. Let's dive into the segments. That should tell us where this growth and profit are coming from. Taobao and Tmall Group first. Still the heart of it all.
It's still the core engine, absolutely. Revenue there grew 9% year over year. That's RMB 101.4 billion, or US $14 billion.
And within that, the customer management revenue, or the ads and commissions, basically, how did that do?
That did even better, up 12% year over year, RMB 71.1 billion. So merchants are spending more on the platform.
And they mentioned why, right? Something about software service fees and Kwansantui. Am I saying that right?
Kwansantui, yeah. It's essentially their toolkit for merchants to manage their marketing more effectively on the platform.
Okay.
The fact that its use is growing suggests merchants are finding it valuable. It's helping them sell more, which then feeds back into Alibaba's ad revenue and commissions.
Right. So better tools mean better results for everyone involved, including Alibaba. Makes sense.
Exactly. And that translated nicely to the bottom line for the segment, too. Adjusted EBITDA was up 8%, hitting RMB 41.7 billion.
So the foundation looks really solid. Okay, what about international? The Alibaba International Digital Commerce Group, AADC, that's been a big focus here.
Very big focus, and it's showing really impressive growth here. Revenue jumped 22% year over year.
22%. Wow.
Yeah, reaching RMB 33.6 billion. Or US $4.6 billion.
Yeah.
And it's the cross-border stuff like AliExpress and Trendyol that are really powering that.
Yeah.
Their combined retail revenue was up 24%.
So they're definitely getting traction outside China. Are they making money doing it yet? Or just grabbing market share?
Well, they're getting closer. The adjusted EBITDA loss for ADC actually narrowed by 13%.
Oh, okay. So improving profitability.
Yeah, they specifically called out Lazada getting more efficient and better at monetization. So it's not just growth at any cost. They seem to be improving the underlying economics internationally, too.
Good sign. Okay, moving on. Cloud Intelligence Group. Everyone's watching cloud and AI, right?
Rightly so. And there's good news here, too. Revenue growth accelerated to 18% year over year. That's RMB 30.1 billion, or US $4.2 billion.
Accelerated growth, that's key.
It is. But here's the really striking part. They hammered this home in the report. Revenue from their AI-related products. It grew by triple digits year over year.
Again, didn't they report that last quarter too?
They did. This is the 7th consecutive quarter they've reported triple-digit growth in AI-related revenue.
7 quarters straight. That's pretty incredible momentum. Shows real demand.
It really does. And it's flowing through to profit, too. The Cloud Group's adjusted EBITDA was up 69%.
69%. Wow.
Yeah, hit RMB 2.4 billion, or
Right.
US $333 million. So strong adoption, especially the AI stuff, and it looks like better cost control, too.
Okay, now Cainiao, the logistics arm. Revenue was down there. What's happening?
Yeah, down 12%. But that's actually sort of strategic. They're integrating more of the logistics services directly into the e-commerce checkout process.
Ah, okay. So it looks like a drop for Cainiao standalone, but it's meant to improve the overall customer experience.
Exactly. Make it more seamless. And importantly, while revenue was down, Cainiao's adjusted EBITDA loss narrowed significantly by 55%.
55% improvement. So much leaner operations then.
Seems that way, focusing on efficiency within the ecosystem.
Got it. How about local services? Emet for maps, Elo.me for delivery.
Also moving in the right direction. Revenue grew 10% year over year to RMB 16.1 billion, or US $2.2 billion.
And the profitability trend.
Same story. Adjusted EBITDA loss narrowed, this time by 28%. They said it's down to better unit economics per order.
Okay, consistent theme of improving efficiency. Lastly, digital media and entertainment. Youku. That's been a tougher spot for them, hasn't it?
Historically, yes. But they had a pretty good quarter here. Revenue was up 12% year over year, about RMB 5.6 billion, or US $765 million.
And the profit, or loss.
A profit. They actually turned profitable on an adjusted EBITDA basis. Not huge, RMB 36 million, but compare that to an RMB 884 million loss last year.
Wow, that's quite a swing. Driven by Youku.
Primarily Youku, yeah. Suggests maybe their content strategy is working better, or they've really tightened the belt on costs.
So across the board, it feels like that user-first, AI-driven mantra is actually, translating into results. Either growth or efficiency, sometimes both.
Yeah, it seems to be more than just a slogan. You can see threads of it in each segment.
Let's talk initiatives then. Taobao and Tmall focusing on the user experience. What does that mean in practice?
Well, things like emphasizing competitive pricing, improving customer service, and really pushing their 88 VIP loyalty program. They said that surpassed 50 million members now.
50 million paying members. That's substantial.
It is. Creates a sticky user base. They're also focusing on supporting, to better merchants, giving them good tools, improving monetization that way too.
And internationally. With ADC, what's the specific plan there?
They mentioned focusing on key markets in Europe and also the Gulf region, so a bit more targeted geographically.
Okay.
And diversifying what they offer on AliExpress and Trendyol, tailoring it more. Plus, working on the profitability of that choice offering on AliExpress.
Got it. Let's swing back to AI and cloud. That's 7 straight quarters of triple-digit AI revenue growth. Anything else specific they mentioned?
Yeah, they highlighted their Lima AI coding assistant. Apparently, it's getting really strong adoption from enterprise clients.
Yeah.
Helps developers work faster, basically.
Makes sense. Productivity tools are always in demand.
And then, the big announcement recently, back in April, was the launch of their new Qwen 3 series of AI models. Their latest and greatest in AI.
Right, Qwen 3. And didn't they open source them?
They did. That's the really interesting part. The entire Qwen 3 series is now open source, available on places like ModelScope and Hugging Face.
Wow, that feels like a pretty bold move, giving away their top models.
It is bold. But the strategy is likely to drive widespread adoption, build a whole ecosystem around their tech, get developers everywhere using it. Could really pay off long term.
Yeah, fostering innovation that way. And Gartner noticed them too.
Yep. Gartner named Alibaba Cloud an emerging leader in generative AI, so getting some external validation too.
Okay, that's a lot on the strategic front. How about capital allocation? What are they doing with their money? Shareholder returns.
Very active on that front. In the fiscal year 2025, they bought back a lot of shares. US $11.9 billion worth.
11.9 billion. That's significant.
Yeah, it reduced their outstanding shares by about 5.1% net. And on top of that, they approved a dividend. It's 2 parts, a regular one and a one-time extra one, totaling US $0.25 per ordinary share, or US $2 per ADS.
How much is that in total payout?
Comes out to roughly US $4.6 billion in dividends.
Wow.
So buybacks and dividends, pretty strong signal to shareholders.
Definitely returning capital. Let's look at the overall margins again. You mentioned adjusted EBITDA, but what about the operating margin and net margin?
Both showed really strong improvement. Operating margin went from 7% last year to 12% this quarter.
Big jump.
And the net income margin, reflecting that huge net income increase we talked about, went from just 0.4% to 5.1%.
Okay, so driven by the revenue growth, but also cost control.
Combination of both. Plus, they mentioned lower share-based compensation expense playing a role. But yeah, it's broad-based improvement across the segments feeding into those overall margins.
Paints a picture of a company getting leaner while still growing. What about the balance sheet? Still sitting on a pile of cash.
Oh yeah, very strong cash position. As of March 31st, they had about RMB 597 billion. That's over US $82 billion in cash, equivalents, and short-term investments.
Wow, plenty of firepower. How's the cash flow looking?
Operating cash flow was up nicely by 18%. But free cash flow, that's after capital expenditures, actually decreased.
Oh, why was that?
Primarily because they ramped up spending on cloud infrastructure, investing heavily in the hardware needed for AI.
Ah, Okay, so investing for future growth, which impacts near-term free cash flow, that makes strategic sense given the AI push.
Exactly. You have to spend money to make money, especially in AI right now.
So the report probably laid out opportunities and risks too. What were the main ones?
Opportunities are pretty much what we've discussed.
Hmm.
The AI momentum, that 88 VIP growth, the international expansion continuing, the new Quen models, and just the overall improving profitability picture.
Standard stuff. Sounds good. And the risks? Anything surprising?
Not really surprising, mostly the usual suspects for a company this size. The impact of those increased investments on cash flow near term, like we just said.
Intense competition, both in China and globally, for e-commerce and cloud. Potential regulatory changes, always a factor. Integration challenges from their restructuring, and just broader macroeconomic uncertainty, global economy, trade stuff.
Okay, the standard watch list for a global tech giant, basically.
Yeah.
So, if we had to wrap this all up, what's the main story from Alibaba's Q1?
I think the main story is that their big strategic shift, user first, AI driven, seems to be genuinely working. It's delivering not just revenue growth, but significant margin expansion too.
Right.
They're balancing growth with efficiency, making big bets on AI, pushing international, and they're clearly committed to returning cash to shareholders. It feels like they're positioning themselves pretty well for the long haul.
Yeah, a strong quarter overall, it seems. Growth, profit improvements, shareholder returns, strategic investments, kind of hitting on all cylinders.
Seems that way, yeah. A positive report overall.
Okay, great breakdown. Thanks for walking through all that.
My pleasure. And thank you for tuning into Stock Talk for this deep dive. Here's something to think about. With Alibaba now open sourcing those advanced Qwen 3 AI models, what kind of really transformative applications do you think we might see pop up from developers and startups using that tech? Could be fascinating.
Definitely something to watch.
Absolutely. Thanks again for listening, and we'll catch you on the next one.